Welcome back to the Mortgage and Marketing Update. I'm Brian DeMarie. I'm a loan originator with Union Home Mortgage and the DeMarie lending team. And so another day of gratitude here. Really hope you're not taking yourselves quite too seriously. And we're going to talk about the CoreLogic Home Price Index. Also something we're not going to take quite too seriously today. You're going to find out why. So it is up 18.5% year over year. And that's up from last month. And December is up 1.3%. CoreLogic is always off on their predictions, and who knows why. Their prediction for December, which is now up 1.3%, was 0%. Their 2021 prediction overall was 2.5%. We know what happened last year, up 20% nationally, right? Their January prediction for next month is, again, a flat 0%. And their 2022 prediction for the whole year of 2022, 3.5% appreciation. So we really do not want our buyers reading this prediction from CoreLogic because they are always going to go way lower than what it even seems like their chief economist even thinks. CoreLogic has their own report. Their chief economist has a different report with different numbers on it. And so remember, your buyers do so well when they buy in an up market. And as I know that there is a lot of multiple offers, it is difficult for them to get under contract. It's up to us to keep them, at least have their tempers down as far as possible so they can stay focused and get themselves to the finish line. Because if they bought 2 years ago, they would be up over 30% appreciation, at least nationally. You know, your markets may be a lot higher here in Florida. But we don't want our buyers to be able to miss out on this chance to create generational wealth. Remember, the two places that most people create generational wealth is the equity in their home and their 401k plans or their retirement plans. So if they only have these two places to gain this kind of income or this kind of generational wealth, we can't have them miss out on one really big one just because they get impatient and it's tough to get to the finish line. Well, if your client can't actually buy, then that means they're going to end up renting. And we look at the Apartment List National Rent Report for the month of January. And this is on new rents now. Month over month, prices are up only 0.2%. But year over year, they're up 18%. So the economists think that 0.2% is probably because of seasonality, you know, with December and all the holidays. But when we look at renewals every year, year after year, it's basically up 6 to 8%. Remember, this is on apartments and this is for multifamily, and multifamily has that built-in internal rate of return schedule that they have to keep so they can pay their investors on the back end when they dispossess. But how much do your buyers miss out on by not being able to buy? You'll have to tune into my rent versus buy class that I'll be doing in 2 weeks. We're going to go over all the numbers to show just how much money your buyers are leaving on the table by not being able to get a house. So remember, Lily and I are always here to give you a fresh pre-approval letter or to talk to a listing agent to let them know just how much work we've put into our pre-approvals and that we stand by the strength of them. If you know anybody that needs to use a mortgage, Lily and I would love to have a talk with them. All you got to do is text us over the buyer's name and the number. Be happy to reach out today to get them pre-approved. All our videos are backed up on YouTube. Check us out on Instagram. Have a great day.